Happy 2024, everybody. I hope this is going to be a great year for all of us. Let me just quickly make an SMC real quick video. Yes, so that's what's happening. SMC one setup a day, then you are done. First things, what are you looking for? Identify liquidity. Generated or what? Trendline liquidity or what? So this is a confirmation setup to somebody who is already understanding the SMC. Or if you don't understand, tell me in the comment section, then let me make another video to explain the setup. But this is what is happening. The market is trending down. This is a 5-minute chart. Oh, this is a 2-minute chart. Just a quick scalp. The general trend is going down. And then you are looking for a retracement. You're looking where you can sell to continue the down trend. So that's what is happening. The market has been consolidating like this, and then that's why we have this trend line. This is what we call a trend line liquidity. The market was trending down with a consolidation, and then what I identify is at a premium level. I'm identifying what? I'm identifying my order block. See, can you see? Let's say it will be you can just say it will be at a premium. So this right here, this candle, this last candle that went up before a downward movement, this is an order block. So that's the candle there. And then the market kept on going down, forming a trend line, which was in a consolidation setup. So the reason why I'm saying this is a trend line liquidity is that a lot of people are seeing a selling opportunity. They are selling. So this is where the trap is. And there's what you call an imbalance. An imbalance is more like a gap. This is the gray thing that you see here. This gray box right here. This is the last candle that was that closed here, and then there's another candle. So this gap in between here is an imbalance. So what normally happens is that in an imbalance, the market normally retraces on that imbalance, just test the imbalance and goes that direction. That's why you see I had this in place. So after the market tested the imbalance, the market reversed and went down. But you have to know that we have what you call the POI, like your point of interest. The one that is more, which you can say reliable, is the one that is at a premium level, which means you can just say here is this is your premium level. This is your premium level. You are not disputing the fact that these are not levels. These are levels that are important, but you're keeping your mind at a premium level where you have an order block. Sometimes you can have what an imbalance. Like here, this is a sort of an imbalance. This space, this gap here is an imbalance. That is why, for example, if we do something like this, and remember this is 2 minutes. If you go to 5 minutes chart, what I know is that this, if you are in a 5 minute chart, this is your imbalance. So you see that's where the market tapped and tried to go down. These are the scalps you can take, but it's not recommended. These are just traps. While they know that they want to tap on the order block above, they're going to make all these things so that you are trapped into selling early, and then they're going to take you out. So yeah. So what happened for me, the reason why I didn't take this imbalance as significant, even though I had it in mind, is because I have what you call liquidity. Again, this is a trendline liquidity, and then these are equal highs liquidity, which you can just see. Equal highs. That's simple. These are equal highs, these ones. So normally what tends to happen is that the market tries to come and clear or sweep this liquidity before it goes down. That's why the market did try to sweep out this equal high. That's why I saw this imbalance is not relevant for my setup. So, and then the imbalance, they tapped on the imbalance, but I saw that this was just a fake move because we have a premium level above, which is an OB. Then guess what happened? The market touched the OB, and then after it touched the OB, the market strongly sold. This what you can do. I'll show you. This is how I trade. Let me show you the exact. Oh, sorry, I took the Fibonacci. Wanted to take this horizontally. This is what I do. So this is your target. The reason why the SMC setup normally kind of the risk to reward ratio is a bit high and really paying is that you see this order block. Immediately we come closer to this order block. This is where my entry point is, and my stop loss is just above that. Normally for safety, normally I do something like this. Just a few space just above that order block so that if they try to manipulate, then you are safe. So that's where you enter yourself. And then your target, my target for this case was this low. I knew that this is a low that is so recent. So the market what to try to do it will just try to come and clear up this low. These are equal lows right here. For me, I put the open of the candle, but somebody might do something like this. This is where the low is exactly. But this is what is when these wicks are going to be swept. As you can see, they were swept. So this is supposed to be your target. Then you are done for the day. That's a simple trade setup. Understand, firstly, the market has to be trendy, going down. And then you know, obviously, when the market is going down or going up, at some point the market has to retrace, tap into some area and continue the trend to go down. So what are you looking for? You're looking for a premium level. In this case, this is our premium level where there's an order block or there's an imbalance or whatever the case may be. So, and then what you need to look for, you look for liquidity. The liquidity need to be generated like this. This was a generated liquidity. It was just they engineer that, they did that liquidity to tell people to sell. Then what you're looking for areas of interest, which in this one, we had an imbalance, we had equal lows above, there was an imbalance above, there was an order block. At some point, the market can just tap on the imbalance above and start selling. It is possible, but always target for your premium level and always observe how the market behave when it's at your point of interest. Always observe how the market is reacting. Is the market giving you signs of sell or something, or is the market trying to break? Because remember, there's what you call a breakup block. Sometimes when you have a point of interest like this, the market can break that and goes up, and then now that thing turns into a breakup block. The market will need to tap on that and start buying. Because you remember, even though you have your what do you call, even though you have your point of interest, you have to know that sometimes it can be broken and the market goes the opposite direction. So this is a probability. That is why we say your stop loss is just like that. So that if you are wrong, you know you are wrong, you accept the loss. So this is our entry. I don't want to talk about the buy setup that we see right here. I was just talking about the sell setup. Go and study this. Look for this in the chart. Look for liquidity. Either you find it's a trendline liquidity or equal highs or equal lows, or and then you look for your point of interest, which is an imbalance or whatever. That's simple. This setup works every time. Go and look for it. Forget about everything that you learned and then focus on this thing. Then you're gonna make money. 2024. I'm gonna miss. Thank you. I'll wait.